Now let me explain about 5 different of Islamic accounting and conventional accounting. Islamic accounting is based on the ethical laws which is derived from Quran and Sunnah. It is a permanent rules, while conventional accounting is based on the modern commercial law which is created by a human. And the second difference is Islamic accounting is concentrated on the community who participates in the exploiting resource, while conventional accounting is only focused on the individual who control the resource. The third difference is the imposition of riba or interest in both of the accounting. For Islamic accounting, riba or interest is prohibited. On the other hand, riba and interest is allowed in the conventional accounting. The next difference is the relationship between investor and the issuers. In Islamic accounting, that relationship we call as a partnership, while conventional accounting, the relationship between investor and the issuer are called as a borrower and lender. The last difference between both of accounting is the information that they use. In conventional accounting, the information needed is based on the economic events and transactions, while Islamic accounting is based on the socio-economic and religious events.
The Islamic worldview on accounting and accountant is very different and special from other worldviews such as Western. This is because in the Islamic worldview, there are two things that need to be considered, which is in this world and in the hereafter. This means all deeds will be judged in this world as well as in the hereafter. According to the Islamic worldview also, there are some basic principles of accounting. Among them are all necessary financial activity must be written and recorded. In addition, any contract must be witnessed by two witnesses in accordance with God's commands based on Surah Al-Baqarah verse 282. Therefore, accountant and witnesses must be responsible, moral and trustworthy to ensure that the contract is done transparently without any irregularities. Therefore, all business dealings such as account must be trustworthiness, transparency and accountability and for maslahah of the ummah. Accountability in Islamic context means every human action or behavior on earth will be held on accountable on the day of judgment. Accountants also have roles and relationships that need to be taken care of according to the Islamic worldview. It is very important for an accountant to ensure that their relationship with God is good by carrying out all his commands. When an accountant maintains his relationship with God, then indirectly their relationship with other servants of good such as superior or client is in good.
Good day, brothers and sisters. Did you know why we need Islamic accounting standards? Here are the reasons. First, to comply with principle of Sharia. To achieve acceptance of Allah and earn halal income, Islamic business have to comply with the Sharia that derive from Quran and Sunnah. It shows how to operate the business from the beginning until the end. Second reason why we need Islamic accounting standards is to differentiate between Islamic financial institutions and conventional banks. Using Islamic accounting standard, it can show that Islamic financial institution can provide the best products and services same as what conventional bank offered, and it can show that Islamic financial institution can compete with the conventional banks. Lastly, to standardize accounting standards. If Islamic financial institution using different standards, it may arise more problems such as reliability and also financial statement that probably cannot be compared accurately.
Assalamualaikum warahmatullahi wabarakatuh. My name is Narayana Binti Anwar, matrix number 273112, and I'm going to presenting about AUFI and MUSFI. AUFI, or also known as Accounting and Auditing Organizations for Islamic Financial Institution, and This body is Islamic International Autonomous Non-Profit Corporate Body that prepares accounting, auditing, governance, ethics, and Sharia standards for the IFIs. And AUFI is also established on 26 February 1990 in Algiers. And what is objective? The objective is to develop accounting, auditing, and governance thought that is relevant to the activities of the IFIs, and to disseminate accounting, auditing, and governance thoughts relevant to the activities of the IFIs, and to prepare, promulgate, and interpret accounting and auditing standards for the IFIs, and also they will review and amend accounting and auditing standards for the IFIs. Next, we move to Must Be. What is Must Be, or known as Malaysian Accounting Standards Board? It acts like as an independent authority to develop and issue accounting and financial reporting standards in Malaysia. It is also established under Financial Reporting Act 1997. And what is Must Be objectives? It has several objectives, about 5 objectives, and I'm going to present to you about. First one is it is to develop high quality, clear, and enforceable national accounting standards for financial reporting that benefit users, and bring about harmonization of national accounting to promote the use and application of those standards by way of communication with and education of users, to contribute to the development of accounting standards internationally, and to do, last but not least, to do promote and support research in the area of financial reporting. And the last thing, we want to know what is the impacts on the accounting practice, the impact of AWIFI and Must Be. Okay, so as for AWIFIs, the effort by the AWIFI can represent the important contributions to current efforts to evolve an accounting framework that is appropriate and further supports the global development of Islamic finance. The existing accounting standards are insufficient to cater for the unique needs of Islamic financial transactions and institutions, as those are developed for conventional institutions and the conventional accounting practices. While Must Be, it create and promote high quality accounting and reporting standards that are consistent with international best practices for the benefit of Malaysian users, preparers, auditors, and the general public. Thank you.
Assalamualaikum and hi everyone. My name is Sabira binti Muhammad Rasidi, metric number 273248. I want to present about the important role of ethics in the formation of more ethical Islamic accounting practices.
The Accounting and Auditing Organizations of Islamic Financial Institutions, IOFI, has developed Code of Ethics that has 3 sections. The ethics in the first section are integrity, vicegerency of humanity on earth, sincerity, piety, righteousness, and accountability before Allah. There are 6 criteria in the second and third of IOFI's Code of Ethics, which are trustworthiness, legitimacy, objectivity, professional competence and diligence, and the last one, faith-driven conduct. This Code of Ethics can be used as the material to explain and expose the ethical manner to the accounting students. Lastly, the concept of maslahah was introduced in Islam to protect the public interest. This concept can educate the accountants for ethical decision-making process. By this concept is divided by 3 types according to priority. First, Zaruriyat, which means essential. Second is Hajiyat, which means complementary. And the third one is Tahsiniyat, which means embellishment. That's all. Thank you.